in the month of July, you had all-time highs in the Dow Jones Industrial Average, S&P 500, NASDAQ. You had the highest number of stocks on the New York Stock Exchange above their 200-day moving average this entire bull market. You also had the most amount of new 52-week highs. So the amount of stocks making new one-year highs on the New York Stock Exchange was the highest number of this bull market. It was also the highest number in the NASDAQ this bull market, right? So when you talk about market breadth, like things keep getting better. Before market tops, you see things getting worse. The opposite is happening, right? Things continue to improve.
Stocktoberfest is back this October 20th to 22nd with an intimate event for executives, influencers, and the most active investors in financial markets. Network with industry thought leaders, including Michael Batnick, Brian Shannon, Michael Parekh, and many more during the two-day event. Early bird pricing is still available for a limited time, so be sure to find the link in the episode description, and we'll see you in beautiful Coronado, California.
Hey, everybody, it's Howard. Recently back from Europe. I did not ride Stelvio. You are on Trends with Friends. As always, Michael Parekh, Goldman Sachs, retired, but not retired in London today at probably an AI conference. We've got JC Peretz, hair is pointing to the left, so the bull market remains. And Phil Pearlman in reasonably sized whitish gray t-shirt.
This is a Twitter old school StockTwits Twitter shirt right here. See, you had the dead bird. Remember when Twitter was doing really poorly? $TWTR. It's a dead bird. It's a classic shirt. The reason that I'm wearing this shirt today is because Stocktoberfest is in effect, out of nowhere, Cinderella story. October 20th through the 22nd, Coronado, California, one of the great places in the universe. Going to be an all-star cast. Batnick's going to be there. Kyla Scanlon, if you've never seen her speak before, she's incredible. Shannon, Schminzen will be there, but don't let that deter you. Michael will be there. JC will be there. I'll be there. Many more coming. Crazy Alpha, plus everybody chilling and hanging.
Yeah, it'll be about 250 people. Darren Ravel's coming to talk about sports memorabilia. It's a degenerate festival. And I was listening. First of all, we're going to cover a lot today. We've got to cover international stocks, biotech, AI, a lot of money rotation going on. For people watching us on YouTube, do us a favor. I hate saying this because I'm 60. Smash. What do you say? Smash?
Smash it, baby. Smash it, baby.
Subscribe button.
And your brat.
Yeah. Smash the subscribe button. Tell your friends. And I was told we're plateauing on Spotify. So we have to do what the young people do.
We have to de-plateau.
We have to remind people what to do to help us grow if you like what we're doing. But anyways, a lot of stuff to cover as the markets rotate. So Phil, take it away. Run the show.
Okay, so we were going to go right into the most interesting chart in the world, but JC added the Bitcoin chart, long-term Bitcoin chart, to the show doc right at the top. So let's just go right to that one. I just wanted an update, JC, on where Bitcoin is historically, because we saw a little, I don't know if you would call it a pump and dump or a little, like a little excitement and then a pullback into the 66,000 range. But it does look like it's sort of staying above the old high back from, a few years ago. So why don't you give us a little, what's going on here?
Yeah, it's certainly, trying. And this looks a lot like other cycles, as you can see here, right? A lot of similarities. And once they were able to exceed those prior cycle highs, it tends to go on for quite some time. I'll take you back to 2014. That's when I had my first Bitcoin. I went to one of these Lindzon Paloozas and I met some people that were dealing with Bitcoin. Remember Change Tip, Lindzon?
Yeah.
Remember that company?
I remember
you used to be able to tip people on Twitter.
I remember because I took the big zero. But yeah, it was ahead of its time.
So this guy gave me a bunch of Bitcoin to share, and I shared some and held on to the rest and turned into thousands of dollars. And that was my introduction.
And you didn't buy any pizzas with it?
No, I did not. I actually gave it. It's still there on Twitter. You could still see me trying to give it to other people and them not accepting it. This was back in 2013, 2014. And obviously that company was a little early on, but nevertheless, that was my introduction. And I've seen these cycles before. I was orange pilled a decade ago because of Howard and Howard's community. You know, that's kind of the beauty of all this. And by the way, what you guys were talking about, don't forget to like and subscribe. It helps in a lot of ways. Obviously, you know, the more you like and subscribe, the more the algorithm is going to give it to other people that are kind of like you and trying to learn and get perspective like you. So that's cool. But also, the more subscribers, the better guests that we can get. Also, you know, like people that are like really legit will be more willing to come on this podcast versus a podcast that has fewer subscribers. So keep that in mind as well. On the Bitcoin, I mean, just a massive base. So, you know, I think that you'll see it. You'll know. It won't just be Bitcoin breaking out to all-time highs. You'll likely see Solana doing the same. You'll likely see the total crypto market cap exceeding 3 trillion and holding above there for the first time ever. Like, there'll be other signs, right? It won't just be one thing. You'll be able to look around. The percentage of altcoins, you know, making new 30-day, 60-day, 90-day highs will probably be increasing. The percentage of altcoins that are getting overbought and in bullish uptrends are likely to be increasing, right? So think about it like that. It's a weight of the evidence thing. It's working on it. I think it's coming. How long it takes, I don't know, but it's coming and you'll know it when you see it.
Yeah, I was talking to ex-president of Coinbase, one of my LPs, is Seif. We'll have him on the show. But very, Michael may know, but he's president of Coinbase early on and advised a lot of fintech funds. He's up in San Francisco. We were talking yesterday about blockchain, which is he's all in on. I mean, when you're wealthy, I think you can focus on things that you really think are long-term. I think that is a great, most interesting chart in the world because it says a lot about more than just crypto. It's really talking about software, which crypto is probably the best area of software out of AI and data. And we're still so early in AI. Like crypto's an old man in terms of, AI has been around forever and crypto's only been around Bitcoin since 2010, 2011. But Bitcoin, from a price perspective and from a global brand perspective, it's probably the fastest growing global recognized brand of all time. Like you think of Coke, you think of Nike, you think of maybe PayPal, you think of, I don't know, but Bitcoin, you say it in any corner of the world and people have an opinion about it. It's kind of like a politician, a famous politician. So, and I think it also, Bitcoin marks this moment that changes so many industries, including my own venture capital, where if we think about venture capitalists and returns, probably the best returns since Bitcoin, if we pull the Bitcoin chart back up, please, probably the best returns in the VC market in terms of actual DPI, meaning money made and pulled out, not just money invested and marked up on paper. If we look at 2018 and that move, from the bottom in 2018, when Bitcoin was like 3,000 to the 60,000, that's on paper. So any crypto investors in 2018 that were buying that low have had anybody in the crypto space has had way better returns than any venture capitalist, right? So you also have Bitcoin is the most interesting chart in the world because if it goes on another run, and it looks like it is based on politics, based on supply demand, based on institutional adoption, based on actual even if it's just gold, you're going to have another cycle where crypto VCs outperform regular VCs. And that the software that people talk about is crypto, not SaaS, not fintech. So I think we're at this huge turning point, and I see this for my own business in venture capital, where maybe VC becomes about biotech, AI, healthcare, defense. We're seeing with the defense sector breaking out in war, and hardware with machines, because machines talking to machines are how people are going to get paid in the crypto economy. So I think this is this chart says so much more than just about the price of Bitcoin. It really talks about brand, culture, talks about the switch of what software is. It talks about computers, energy. So there's so much wrapped in this little chart, so it is good call. I would say it is. I was going to say Solana and Biotech right now as the most interesting charts in the world, but Bitcoin kind of says all that itself. Go ahead, Michael. And that's so.
No, you compared it to the VC returns. It's also notable. I'll give you one anecdotal example of Bitcoin's performance versus public market tech performance. So one of the most fabled investors in Amazon is Bill Miller. He was at Legg Mason, and he was an early investor in Amazon, both for his organization and himself personally, made billions of dollars. And he was on record, I think a couple of years ago, he ended up buying Bitcoin prior to the 2014 level. And I think he's been on record saying he's made more money on his Bitcoin trade than it's made on Amazon from being public in the early 2000s all the way to 2024.
And I will say, as an investor in Multicoin, which has had a 90% drawdown, then maybe few went 60% drawdown, and obviously my own Bitcoin money, a small account allocated, but my large crypto allocations, which are through funds, are the best returns. I was in a fund that had Uber in my Multicoin fund, and I mean, even with a 90% drawdown, and I sold some on the way up, but even with the 90% drawdown, is my best performing fund, even after paying 2 and 20 and having a 90% drawdown. So again, going back to that Bitcoin chart one more time, and then I'll leave this because it really is such an interesting chart, is that I have been doing VC now since 2006 and starting companies. I know our returns. I know our DPIs from our funds throughout, and I know the date because our third fund was 2018, or our fourth fund was 2018. And it is, on paper, it's a great fund, but that's 2018. That's 6 years ago. Anything from 2008 to 2018, there was so many companies after 6 years that either had been acquired, had been wound down because of the cloud, had been gone public, had become decacorns. Post 2018, I know this because I've been investing since 2000 and 2006 through a few cycles. There's very little DPI for such a high percentage of funds. And so we are in this massive underperformance trend, which hasn't been papered, right? It's all on paper. All this money flew into, software venture capital in 2018, and we had the COVID bump. But really, all the returns are in crypto, and they're in the public markets. I don't think there was so what's interesting is all this money that's trapped between 2018 and today that still has to be accounted for. And that's kind of the wall of worry, right? There's this money that's trapped in overpriced private assets that, people rushed in, Michael, from Andreessen to all these big funds, $5 billion, $10 billion private equity funds paying. And meanwhile, you could have just been in Bitcoin and Solana and QQQ since 2018 and really crushed it. So I don't think we've paid that price in terms of there's trapped capital that is really underperforming the market. So that Bitcoin chart really explains it.
The one thing just to add, since you brought up the complexity of the industry, etc., there is a short term between now and November, obviously a political tug of war going on Bitcoin crypto in the context of regulatory environment, especially in the US. And a lot of the weight of the crypto community is obviously on the Trump side going into the election, and there may be some movement on the opposite side, and that's another variable just to keep in mind.
Yeah, if the U.S. becomes the largest buyer of Bitcoin in the world, is that bearish for the token?
First of all, that's all speculation because it seems dumb. But Michael, you've been around the Fed with the government.
You think it's dumb for the United States to own Bitcoin?
I just don't think that is high priority. I think that's just political pandering. We can speculate.
But does it have to be high priority for them to do it? Could it be a low priority own Bitcoin? Why does it have to be high priority?
Because first of all, assume they are. Second of all, you can assume Goldman and BlackRock and JP Morgan have been doing the same. The price is reacting not to what Trump would do or what Kamala would do. The price is reacting to.
Well, hold on, forget about Trump or Kamala. Like, let's just think about a bigger picture. What about the president after that or the one after that? I'm just talking about eventually. Like, how much? Think about it. Like the total GDP of the United States. Think about the total debt of the United States. How much Bitcoin would the government need to own for it to be meaningful for them to even bother to do it? Right? Like, is it 1%, 0.5%?
That's the problem. There's a finite amount of Bitcoin, right? It's supposed to be 23 million. All the other coins.
Isn't that bullish?
No
the fact
caps.
that for it to be meaningful for the United States, they would have to buy a lot. Isn't that a good thing for the price of Bitcoin?
Technically, but recognize that the proponents of Bitcoin as a reserve from a U.S. governmental point of view are pointing to the gold reserves of the United States and other countries. Gold as a reserve currency has historical precedent going back 100 plus years, right? And it's a direct descendant of the gold standard and so on. So the notion that the governments have to do Bitcoin as a reserve element, as Howard said, right now it's an opportunistic political thing that's going on. It's not necessarily grounded in anything fundamental as to what the U.S. government needs to own. U.S. government right now theoretically has a $9 billion position in Bitcoin that they seized. No, but remember, this is not the U.S. government buying it. These are assets they took from scammers and
right, but
and,
that's
and so on.
Nothing
So
is my point. They don't know. 9 billion might as well be zero.
Correct, and that's the point. So it's very speculative that this is going to be actual U.S. policy. To your point, JC, that it's policy that would then transcend administrations. That is a long-term direction that there's no.
Well, let's go to the next chart. Assuming there's a tailwind, which now I think the four of us agree there's a tailwind. Right? You have both parties realizing you get the most cheers if you say Gensler is out and you say whatever the woman's name on the Democrats, the nightmare, what's her name, who's in cahoots with Gensler, who's with the short hair.
On the committee.
Anyways, that everybody hates. But if there's that tailwind, the next tailwind is stablecoin. If Bitcoin's a thing, you need stablecoins because what's the way to get out of Bitcoin? It's through a stablecoin, right? Like, how's the money?
Don't stablecoins just make the U.S. dollar stronger?
I don't want it just to be global macro,
right? More important,
but doesn't demand a stablecoin make stablecoins stronger and as a product, and then if stablecoins are stronger as a product, obviously, what's the next chain? And the next chain seems to be pretty much sealed up in being Solana. So that would be the next chart. Let's pull up a chart of Solana. And Solana from the bottom, when we started talking about it on this show at 20, on the breakout of 20, really got as low as 9. So it's a 20 bagger. Whereas Bitcoin's 18 to 65, Solana's a 20 bagger already off the lows. And if we look at Solana, well, very few people still know about it. Solana's in a much better position than it was when Sam at FTX owned all of it and all the drama around the supply being held by a criminal. That's all been cleaned up. If you think about meme coins, and JC, you're going to do that next, I'm sure. If you think about meme coins, probably 90% of the transactions are happening through Solana and wallets associated with that chain. So in a world which I call the degenerate economy, not judging the behavior, but just saying it is what it is, right? Like sin stocks, kids don't drink as much, right? Sin stocks of yesterday are different than sin stocks of today. But sinning is the same thing. I call it degeneracy right now. In the old days, there was no gambling online. There was no day trading and futures trading online. So booze, tobacco, guns, war, those were your sin stocks. Today, the sin stocks aren't the same because young people have different vices. Their iPhone, TikTok, dating apps, endless dating apps, endless choices. So we've gone from sin to degeneracy. Part of degeneracy is the Solana chain because that's where anybody can dream up an offering, be it cultural, be it, you have to assume rug pulls left and right, but Solana has been the choice of the degenerates.
The cool kids are all doing transacting on the Solana blockchain. Can I give some perspective here? Solana's just completing its first cycle, bull market correction, assuming that this completes, which I think it will shortly. When Bitcoin completed its first cycle, it went on to 12x in the next ensuing bull market. So I'm not saying that Solana is going to 12x after its first cycle, but some context.
Well, some context. Wallets are getting, again, I'm starting to do some work here because of Stocktwits, right? CEO of Stocktwits, we're tripling down on crypto. So I'm having conversations that, sure, I was having NFT conversations when I wasn't CEO, but I didn't have any NFTs. And now you did, JC, and I'm not bearish on NFTs because there's some utility somewhere in how people construct these. But it wasn't necessary to be involved in NFTs, just like it's not necessary to be involved in meme coins. But as Solana matures and as brands realize the cultural value, including Nike has really dropped the ball on tying their consumers that love Jordans to some kind of alter currency or workout currency or kind of game mechanics of fitness. And so in a world where you can go to Instagram and find your trainer for free, incredible, like whether it's Phil doing his lifestyle coaching or these incredible trainers on Instagram, Nike has never tied that all together, nor has Lulu, nor has anybody, right? There's always been this talk of like digital meets physical. Well, the reason Nike's struggling is because they have an incredible brand. They have people that will trade shoes online, but they haven't given those people truly what they want, which is some other form of currency that says, I'm a Nike fucking super fan, right? And until they figure that out, they're not going to participate in this next move higher, no matter how many shoes they sell. And so I think that's an unlock that's still coming to crypto, which is culture, brand. I don't know what it looks like. I'm just saying there is something there because guys like Phil who have a digital wellness program can build a business, but this has to be applied at scale to the Nikes, the Lulus, the Pelotons, etc.
You know what? I got one for you guys. So my homegirl, Caitlin Cook, Dead Kate Bounce on Twitter, is helping to build a company, and they're building it on Solana blockchain. I don't understand how it works, but I know what JC said about all the cool kids are building on and transacting on Solana. They're building this fitness app on. It's like a gamified walking app called Moonwalk Fitness on the Solana blockchain. Really, really cool. As a matter of fact, I think I'm gonna get myself a watch just so I can play the game. But that's just an example. I mean, I don't know if that's the solution or not. It's a tiny little company. It's a startup, but it's cool.
But these have been around. There's that anyways, there's been apps like this. There's been tied to NFTs.
Like Steppen. It sounds like Steppen.
A little modern version of Steppen. I just think these apps appear out of nowhere, right? How do people react? Dating is one way, right? Match, Tinder, when the internet came out. It's going to be the same protocols. I don't think crypto is as big as what it's the internet, but I don't think crypto as an app-based thing. The world's moved beyond apps, guys. Like if crypto's solution is apps, you're going to be disappointed. People are tired with it.
But there are AI. So the current hot one amongst the kids right now is Talkie. I don't know if you've heard about it. It's Chinese. One of the 4 top Chinese AI companies owns it, just like ByteDance owned TikTok and brought it to the US. Talkie is just one of the top growing apps in the US. And it's basically AI companions and friends for kids. And they're loving it. Oh. It's just in the last 6 months.
Hey, Phil, let me just tell you, an AI companion for kids is better than the real world, the real social world for kids, right? Having a friend that actually understands you and won't shame you might be better than the internet. Listen, the internet turns you into the person you don't want to be right now because social is broken, right? The algorithms are broken. We don't know how to use them. Our masters of these algorithms have their own political beliefs. So be very, I can understand why Talkie would work, right? I've seen this done before in the app world. It's just, well, anyways, we'll move on. I think it's such an interesting topic because it just touches on so.
It really is. It really is. No question. And the talkie thing, that's a whole discussion in of itself. But let's move on just for the sake of covering half of the stuff that we have on tap for today. Biotech, Thelonious Stank, and I love his name. I love his name on StockTwits. Thelonious Stock posted a chart around biotech breaking out of its downtrend versus the QQQ.
JC, let's pull up biotech. We talked about it a little bit earlier. Small caps are tied there, but Amgen, iSearch, the bigger biotechs were Regeneron were breaking out. Now we're starting to see something different happen. JC, so walk us through it.
So it gets back to the interest rate story. We talked about it last week, guys. Regional banks, biotechnology in general, both of these things were struggling. There are large cap biotech stocks, but most of these biotech stocks are very little, $1 billion, under $1 billion. Most of them are under 10 billion. You would be surprised to hear that between 10 billion market cap and 30 billion market cap for biotech, there's like 3 companies. They just don't exist because they either go to zero because their drugs don't work and they don't save anybody's lives, or they get bought out by the big guys, right? So there's very little in between. So I think it's important to understand like what biotechs even are. You got the big ones and you got a zillion little ones. And the zillion little ones are filtered throughout the Russell 2000. There's like 240 of them in the Russell 2000 because the small cap S&P 600 index requires a track record of earnings in order to be included. The Russell 2000 does not. It's just a market cap thing. So you got a ton of biotechs. So that's what, if biotechs are not in favor or regional banks are not in favor, those small cap indexes are going to do very poorly, right? Small cap industrials are up 75% this bull market, right? Biotechs and regional banks have not done those. So when you talk about small caps, you also need to be careful. But to biotech specifically, it's the interest rate story. You had some of these big names working already, some of these drug manufacturers working already, and now you're getting that bid in small caps at the index level with regional banks, biotechnology stocks. They're all moving together. So it's all that rotation coming in. So I think it's a bond thing, if you really want my opinion.
Okay, so it's a bond thing, but the market may have solved the problem that VC wasn't. Meaning, okay, so I just learned something new there. Mike probably knew all this from Goldman days, but you're right. Small cap 2000 is market cap weighted. You're saying the small cap 600 is profit based. So they're probably, I don't know if you have both those charts that we could look at. I'd be interested to see how they've performed over the last couple of years.
They look exactly the same.
Why do they look exactly the same? Because of interest rate?
Because it's an asset allocation. It's a portfolio. It's an asset manager, portfolio manager allocation correlation versus a, actual, sort of fundamentally oriented. They move together.
Shouldn't that diverge if profits matter?
You would think so. The answer is no. They don't. I will say though, when you zoom out, the S&P 600 is slightly stronger, not by much. If the market were to close today, it would be the highest monthly close in the history of the small cap index.
But which would you buy if you only, why do both? So how do you play it in a world where...
I'd buy the Russell 2000 because it's more liquid.
Okay.
The options are more liquid. Like the S&P 600 ETF isn't as liquid.
So you choose the liquid. Okay. The other thing that may be favor of biotech is jump the shark, like Merck, Lilly, Novo Nordisk, Amgen, Regeneron. Now they have market caps that may allow them to do some hunting, Michael. Like you were in the Goldman back banking days and as head of internet analysts. How does that work? When do companies start? It feels to me, this goes to a question we should help because you have the expertise here. So gets queued up to get us back on track. But if you have the expertise here, it always seemed to me, and we've talked about with Robinhood, was companies should be buying when things are broken. But they don't want to buy things until their stock is a higher price, right? They'd rather overpay for it. Just makes no sense to me. So now that Lilly and Novo Nordisk and Amgen is in their head, and Intuitive Surgical and Regeneron and all these companies that are like the famous biotechs, do they feel better now about going out to buy versus buying beaten down biotechs?
Well, Yeah, when it's a strategic big pharma, generally speaking, the price levels in terms of up and down, etc., that's icing on the cake. They're absolutely picking biotech is a well orchestrated machine in terms of startups to growth to then selling to one of the big pharmas, etc. There is a timing sequence that's basically been relatively consistent with market volatility over the last 20 plus years. The fundamental driver, since we talk about AI a lot, AI is again early days, but in the next 3 years, because of the fundamental way AI is going to open up the aperture for discovery on compounds and proteins and so on, testing a lot of things through AI, especially through examples of Google's DeepMind with AlphaGo and so on. And they've put out there in open source this incredible 12 million protein database. It's a total game changer for the way the biotech industry and the pharma industry operates. But it's early days, so don't go rush out into any of this. But in the next 2 to 3 years, we are going to see a fundamental change potentially where there's more drugs going through the regulatory approval cycles, which may affect how pharmas that you're asking about, Howard, when they come in and jump in. Obviously, if we have a correction down, etc., if the strategics and investors are looking for a time to bottom tick some of this, that'll absolutely happen. But I just want to say, just generally speaking, there is a timetable on getting the FDA clearances and when pharma comes in for the first leg and the second leg and partnerships and JVs and so on. So there is a methodology to the volatility.
I'm happy for the people that are benefiting this. It's just very hard as a 60-year-old to now want to go learn something about this industry. So I'm going to have to do the indexes. All right, Phil, are you back? Do we have Phil back, everybody?
I'm here. And just really quick with JC, just to follow up on that and a follow up to Thelonious Stank's chart there with biotech breaking the downtrend relative to the Qs. Is some of this just a rotation out of Qs, out of tech? And I'm looking at your Advance-Decline and I'm looking at your equal weighted charts here. I mean, we're making new high. I mean, tell us about that one. This chart is just incredible, given that what's been the strongest area of the market is now pulling back and NVIDIA's kind of getting a little wonky and so forth.
Yep, you could throw up the Advance-Decline line here on the New York Stock Exchange, making new all-time highs, right? So the New York Stock Exchange consists of the most important companies in the world. So all of these ADRs, that the most important companies in individual countries in Europe and Asia and Latin America, they trade on the New York Stock Exchange, right? So when you take the advancers minus the decliners and you add those, you could really see the trend of the actual components of the world's most important index, which is the New York Stock Exchange, the world's most important exchange, I should say. So the components, so this is common stocks only. So this excludes like closed-end funds and like other things that trade on the New York Stock Exchange that are not stocks. So this is very stock specific, making new all-time highs. So let's understand that everybody was complaining that it was only 7 stocks working, even though it wasn't, but that was the complaint. Now that those 7 stocks are not working and everything else is, they're complaining about that, right? It's just that people like to complain. The idea is to understand that in the month of July, you had all-time highs in the Dow Jones Industrial Average, S&P 500, NASDAQ. You had the highest number of stocks on the New York Stock Exchange above their 200-day moving average this entire bull market, right? So in other words, if you're above the 200-day moving average, you're probably not in a downtrend. There's nothing magical about 200. It could be 205 or 197. It's just, that's a pretty good gauge, right? It's about almost a full year. And if you're above that, you're probably not in a downtrend. We saw the most amount of those stocks that we've seen in years, this entire bull market. You also had the most amount of new 52-week highs. So the amount of stocks making new one-year highs on the New York Stock Exchange was the highest number of this bull market. It was also the highest number in the NASDAQ this bull market, right? So when you talk about market breadth, like things keep getting better. Before market tops, you see things getting worse. That the opposite is happening, right? Things continue to improve. And I'll point you to the breadth is historically very extreme when the worst S&P sector is up 15%. Right now, the worst S&P sector is up 6% in a year-over-year basis, right? So we're nowhere near that end either. And then you also tend to see the causes of that downtrend, the leadership groups to the downside already rolling over, making new lows, down 15, 20% already before the S&P 500 peaks. None of that is happening, right? So things continue to improve. As Howard always says, the news keeps getting worse. The noise keeps getting more abundant. To me, that further reiterates it's not the noise or the news, it's filter failure. If you are looking at what the market is actually doing versus all this other nonsense, you're going to be at a huge advantage over those who are forced to consume the nonsense and ignore what's actually happening.
Good point. I'm writing a post today about how, and this goes to my VC comment, the more time I spend trying to figure out my filters, the more time I should only be filtering for price right now. So every filter that I'm applying to social media is a waste of time compared to me filtering indexes and price, because you have this perfect storm happening. Everybody assumes the war is going to escalate. So let's assume that's priced in. If the war in Lebanon is going to escalate, yes, bad for Israel, bad for Lebanon, bad for Iran. But that's priced in. What's not priced in is peace. What's not priced in is who's going to rebuild Gaza? Is it going to be China? There's going to be a fight over who rebuilds it because we're going to be worried about who's the politics running Gaza. So I think we can assume it's not going to be Hamas, because now China's thrown its hat in the ring to rebuild Gaza today. Whether it's fake news or real news, everybody's going to want to rebuild Gaza because where it sits politically and where it sits from a land-based perspective. So let's assume the worst news is priced in. You got to rebuild Gaza. That's positive. Okay. Then we got to rebuild Lebanon. Then we may have to take out Iran and rebuild that. So a lot of the news is kind of priced in. And
is that the bad news? Out of curiosity, is that what they're saying? Those things that
no, I'm just
that's
saying
what people are afraid of?
Kind of priced in. We read it every day. You go to Twitter, you read it every day.
It's not the recession. People aren't afraid of recession. They got past that one.
I don't
yield curve. Remember the yield curve?
I just think if there's recessions going on all the.
It's an illusion.
A yield curve.
It's all an illusion.
There's recessions going
Nothing
on.
Really matters. None of this stuff really matters. Interest rates and the Fed doesn't matter.
I got your Tuesday curve
news
right over
halfway
here.
around the world doesn't matter. None of it matters.
It doesn't matter until it matters.
It doesn't matter.
One morning, everyone
if
wakes
you're
up.
a deal person, go pull up the Goldman Sachs charts that we've been talking about being long. Talk about a recession. You're a Goldman banker. It has been the worst of times for 15 years, Mike? Every year you're getting worried about your job cut. You're worried about bonuses. Those worries are gone. Goldman Sachs is back in the degeneracy game. They're back pillaging. Who's going to be the broker that goes to China and US and brokers the construction and the money for Gaza and the money for Ukraine and the money for rebuilding this and the money for that?
And what about the block and chain? Don't these guys benefit from all that?
They benefit from
Probably,
everything
right
now because they're focused on pillaging. They're focused on taking 2% rips, not 10 basis point rips, right? They've learned their lesson. And no one wants to own Goldman, and it goes up every day. No one wants to own the bank.
And there's probably an IPO cycle post-election as well. So just everyone's all the aircraft are circling right now for that, especially if the Fed gives any indication on rate movement, the downward direction. It's off to the races going into the first quarter next year and late this year.
I forgot in my rant because you guys were giggling. The other thing we talked about last week, it's whether it's September, July, or next year, right? What the Fed is doing today is tough because they got to factor in is Trump going to get elected? Because his policies would be inflationary, so it'd be hard to lower rates right now. You got to think how hard it is to be the Fed if they're actually doing their job. Because I don't even know what I'm talking about, and I know this. If you have to assume Trump's going to win, if he's going to win, and up until 2 weeks ago it seemed obvious. But if he's going to win, he's talked about tariffs. He's talked about all these crazy inflationary products. So you lower rates right now. What the hell are you going to do? So stocks are kind of holding back because they don't know. But you can see everything's lining up for a big move higher at some point. And then if rates come down, right, that cash is trash mantra starts again. This wouldn't be a short cycle. And if you're locked up in T-bills like I am still, because 5% has been pretty good for, as a hedge against venture capital, but you don't want to just go buy Apple, Google. There's enough tools out there with AI and with Koifin and with FinChat and with social to go dig a little deeper and look beyond now at the indexes. And there's direct index, and there's all these new ways to discover stocks and do a little more work, which is another reason why smaller caps and people will start doing the work and not just buying FANG. Go ahead, Mike.
And I'll just toss in the China side of things as well. Right now, if you look at all the news, it's negative on China. You said you saw the Trump commentary on Taiwan not defending, impact NVIDIA at 10%, so $200 billion, more than Intel's market cap. The point on China is that they're approaching deflationary tendencies because they got so much capacity. China's built to basically supply the world. And everything China's done from a political point of view is basically shutting off those avenues. And their companies are utterly flooding everything from autos to appliances to clothing in their local markets. And they're chomping at the bit to sell overseas. And once we have resolution on the election, the China piece is also a piece of the equation. We may see the U.S. and China continue to thread the needle rather than go more at each other like they have been. But that's a potential surprise flip that is not in the market right now to what you're talking about, Howard.
We're seeing it, Qualcomm, AMD, NVIDIA, SMH getting hammered in an uptrend, oversold. Could be Trump's, chat. But we know how these things play out, right? Like if the best time to buy is in an oversold uptrend. I'm not saying go buy Qualcomm, but I mean, I'm looking at some of these charts going, if you were ever wanting to get into semis and you do it in an uptrend and a vicious pullback, and you try and pick some companies that don't have actual news, for the decline. But like I look at Qualcomm and I look at NVIDIA and I'm like, man, if you ever want to own them, that could be a chance. But keep going.
I'll just point out one item on NVIDIA on a fundamental basis. It was a little under the radar. Jensen announced a whole slew of China-oriented products that work with the Department of Commerce restrictions, even the ones that are coming. And the fact that they're doing it, it means that they feel relatively comfortable that they've got at least a 4 to 6, 8 quarter window that regardless of what happens in the short term on curbs and so on, they can access the China market directly. And that's a big number. It's a 10-15% number plus. It could be higher if we didn't have all these US-China curves. But NVIDIA is a huge supplier, just like Apple, by the way, in China. Those are the two of the Mag 7s that are front and center directly facing the China issue relative to the other Mag 7s that don't have.
That's why they may be pulling back. That's why they may be pulling back a little more. All right, Phil, what's next?
Correct.
Okay, so we've had a global conversation now, which is a perfect segue into this next potential most interesting chart in the world, and that is that this is a chart from BofA Global Research. No rotation from U.S. to international equities, and I don't know if that title is really a good one, but what we're seeing here is the continued outperformance of U.S. equities over global equities. So it's a really interesting chart, and then we're going to follow it up with some JC charts. And, basically what you're seeing here is that the U.S. is just, and so we have this home country bias anyway. There's a tendency among people in the U.S. and people in all countries to hold more of their own country's stock than is rational. And so now, if you've been doing that for the last, 10 years, you've been rewarded incredibly well. JC, any view of this? And then we'll look at some of your charts, Canada, Australia, and so forth. London.
It really is just a waiting situation, right? The United States has a ton of technology. Other countries don't. So when you look at the All Country World Index ex-US, look at EFA, which is developed markets ex-US, what are you going to find? You're going to find double the amount of industrials. You're going to find a third or a fourth or less the amount of technology, right? It's a fraction of the technology. It's double the industrials. It's 4-5x the materials exposure. It's at least double or 3 times the energy exposure. It's really just a composition. That's it. If the
And in reality, some of these foreign markets are doing incredibly well. The London one, the FTSE, just blew me away when I saw that chart of yours. Let's just take a look at that. I mean, this is a long-term chart, and this is just an incredible setup here.
you know what they're weighting in the United Kingdom as the technology at their index level? 0%. Just to give you some perspective as to just how different it is. The United States in the S&P 500 is 2% materials. The United Kingdom is 8% materials. The United States is 3% energy. The United Kingdom is 14% energy. Right? So again, consumer discretionary is 6.5% of the United Kingdom. It's double that here in the United States. So it's really just a composition. There's a reason why the United Kingdom hadn't done anything for multiple decades. There's a reason why France hadn't gone anywhere for multiple decades, right? Look at the S&P the Euro Stocks 600, which is the broadest measure of European equities, did nothing for decades and is moving on because they didn't have tech, right? They didn't have tech.
So London hasn't made a high in what, like 8 years?
6 years, yep.
And now we're back and breaking through that level. Do you have like what you're looking for, or a measured move, or where you'd put risk management and so forth on this one?
Yeah, so this is less of a trade and more about information about global risk appetite, number one, and what type of risk appetite. Notice how this thing didn't do anything for a long time because it didn't have any technology in it. It had a bunch of the other stuff that was underperforming or not performing at all. But now that those other things are performing, industrial stocks are absolutely ripping. Why do you think Europe is the talk of the town? European stocks keep making new highs. Why? It's because of their industrial exposure. They don't have any semiconductors. They don't have tech stocks in Europe, right? It's industrials. It's healthcare. That's what's driving these themes. So that if those sectors are in favor, those countries are going to do well. Those sectors are not. So then let's say you're like, well, JC, I'm never going to trade the United Kingdom. Great, neither am I. I take that information and it's suggesting that I should be paying more attention to natural resources. I should be paying more attention to industrials. But I already knew that, right? So it's really just confirming what you're seeing in other parts of the world, what you're seeing in your sector work, what you're doing in your individual stock work. Look at energy, for example. We just talked about how UK is 14% energy, the United States is 3%. Oil's been getting the crap kicked out of it. Oil stocks are hanging in great. Valero keeps making new highs. The relative strength in energy stocks, despite the selling in crude oil, really stands out in this environment.
That's a pretty good take. Okay, that's a good one.
So that's what UK means to me, Perlman.
And so Canada with the energy too. I mean, there's another one.
No tech in Canada. They don't do tech up there.
Perfect
It's
time,
natural
perfect
resources
time
and
right
bank.
now.
Right.
That's a perfect time for us to invade Canada right now and just take it. They don't know what's going on up there. As a Canadian, I say, please just take it.
It's the same story here as you're seeing in United Kingdom, Pearl Dog.
All right, we got Riley on to talk about a trend with no friend, which is our favorite kind of topic.
Riley, I love the shirt. Speaking
What's
of
up,
shirts,
boys?
stealing from Howard a little bit. You look very sharp.
Thank you.
What do you got for us today?
Well, do you guys wear contacts? Does anyone else here besides myself wear contacts?
They're so hard to put in. I've lost 2 eyes because of that. I can't do it.
Oh, that's a shame. Well, so today we're talking about Alcon, which is the $46 billion eye care product provider with only 444 followers on StockTwits. You could make the case that this is a household name because 1 in 6 Americans wear contacts. So that's approximately 45 million people. I myself have been a consumer for more than half of my life, and the stock gapped up roughly 10% following its May earnings report. And since then has just been consolidating and slowly inching higher. Today, it's actually working on its second consecutive inside day. We'll see if these lows hold. But then we can go ahead and zoom out to the weekly chart, which I believe is the next chart there. And this area in which we're flagging right at these highs lines up perfectly with the former all-time highs dating back to Q4 of 2021. So really, as long as this thing is above the $90 to $87 mark, it looks like the path of least resistance is higher.
You have a lot of things working in this. I'm looking at the company, been following since we brought it up. You got the breakout. You have aging America. You have more screen time. You have vanity. So there are many trends in play. You have Facebook buying 5% of, in a world where glasses of Luxottica. The company's probably in play from one of the tech companies at this point. So I think
this is great. This is great. This is great. What I want to know, Riley, because I love these new highs and I love the trends with no friends. I would love the Alcon followers relative to all European ADRs, right? Because it's a Swiss company, right? So I would love to see those ratios. You know what I'm saying? So take all the European ADRs, get the average followers, and then do like Alcon relative to that number, right?
And since Riley brought up digital contact lenses, the closest one on digital contacts and the big ones is Google. They've been poking around in that, no pun intended, for a while, and I think it's still in work in progress there.
This is a top 10 component in the iShares Switzerland ETF, by the way.
It is in the Switzerland ETF. It's probably their biggest company. This can be considered a tech company too. 1945. So Riley, when did this show up on the screen? Just recently?
No, I mean this popped up following its May earnings report, May 13th, and so I think the other interesting note is since that earnings report, there's been 18 posts on StockTwits. So even with the low follower count, the stream itself is very inactive.
It's a big company.
Big company. And the users are daily users. I mean, they're similar to a drug cartel. Like if you wear contacts, you have to buy Alcon.
Again, for a stock to really kind of change its trajectory, there has to be a catalyst. So I've got to do some work on what the catalyst. The catalyst could just be technology applied and AI applied. And
why can't this just be a stock that keeps going up?
It can. It hasn't been that over time. It's been a great company, obviously $45 billion. But again, when you have, JC, I'm just trying to say that when the market is so good and there's so many stocks hitting 1-year highs, you can't own everything, otherwise own an index. So it's just relatively, what are you dropping out of your portfolio to buy this? But yes, this is why I'm more interested in the equity market sometimes than private markets right now, because there's just so many of these that provide liquidity that can probably get you your 10% a year quietly. But if a catalyst emerges, and that catalyst is probably something related to tech, this could easily be a double. But I'll have to go check some of the metrics. But it's interesting that we've all
off the top of your head, Howard, in relation to tech, are you just thinking that our eyes are getting destroyed by all this?
Yeah, I mean, I look at my eyes and I'm a 2 times magnifier, right? It makes me feel old, and like every year I gotta work. My eyes aren't bad, but they have to go get that strengthened. And in talking to my eye doctor, he says, wearing glasses doesn't make your eyes worse. I mean, at least that's what he's telling me. So don't be, it's not me. Starting at 2 doesn't mean you're going to have to go right to 2.5 times magnifier. But, the thing that against contacts for me in general, and probably why I never bought the stock when I got contacts, is I hated them. I hate contacts, but I'm the minority, it seems like. I just hated the idea of touching my eye and keeping it clean and the whole thing. So, that is an issue. Go ahead, Mike. You were going to say something.
One trend to just keep in mind on technology affecting eye care, etc. The canary in the coal mine on that front is Asia, Korea, etc., where the statistics have already skewed to worsening eye condition for younger cohorts in those markets in Asia, China, etc., because they typically have spent anecdotally more time online, games, etc. And so there is an element of that potentially spilling into the global markets at a slower pace.
Just a quick comment, just to give a shout out to Degen Stock, a guy with a name after our own heart. He's on the ALC stream, and he's basically just saying crazy the little amount of watchers for the leading brand eye care. So he's talking Riley's book, basically. He's like, we're on this thing. It's performing incredible. And there's nobody here.
Well,
it's awesome.
But it goes to what we are using our data for. It's like there's some stocks, there's some trends with too many friends. Nike, Starbucks, Lulu. it's very hard to tell the difference between a great brand that's in an uptrend unless you look at the stock price, and then the stock price tells you a story, right? It's like which leading which. But you have to do this over time and do what we're talking about here. It's really just a lot of grunt work to say, I don't know, why is Alcon doing better than Nike? Aren't they just huge $100 billion brands? Well, no. There's so many factors that go into play, and there's so many catalysts that turn. And Alcon's got a great market share, 1 out of 6, as we could say. It's in Switzerland, so no one's following it. I mean, who follows Swiss stocks? And secondly,
the largest component of the European financials ETF is actually Swiss. It's Zurich Insurance, Zervi.
So what JC said, the people that do the work, it's not about you're going to go buy the
Nestle is Swiss.
You're not going to go buy the FTSE, but by looking at the FTSE, it can reinforce what we already know is happening in the U.S. close to home and in your Robinhood account. All right, so good one, Riley.
Okay, so we have a few minutes left, and I just want to ask Michael. I mean, Apple, I think, reports tomorrow. We're taping this on Tuesday afternoon. Is it worth us having a 5-minute conversation anyway, even though this is going to air after they report, specifically on Apple Intelligence? You were just writing about it earlier in the week or late last week. Apple Intelligence is just so interesting. There's a little bit of a delay, but that's not really that big a deal. But why don't you just tell us, what is it and where are we right now?
Just to remind folks, we talked about Apple after the WWDC this summer, that Apple essentially flipped the whole large language model game on its head. They basically announced to the world that they're going to build large and small language models within their ecosystem of products across all their hardware, across all their operating systems, across all their applications, and basically open up their approach of very optimized for privacy and trust for over 2 billion Apple users, which is diametrically opposite to what every other Mag 7 company, especially Google, etc., where the customer is the product, is doing. And so Apple is basically done a jiu-jitsu move, basically inverting the strength of the OpenAIs and the Microsofts of the world and put them outside their garden of ecosystem products. And what they're doing is basically building up dozens of small language models, applications, etc. All of those products are just released, the Apple Intelligence, which is their renaming of AI, and their personal compute, cloud compute, which is going to be a very trust-centric repository of cloud data for their customers. All of that, they're getting ready for the launch of the iPhones and Macs and iPads and so on in September, which will use iOS 18, 18.1. What they announced yesterday is that 2 things. Number one, that developers can access the Apple Intelligence-oriented features in the beta versions of iOS 18.1 today, and there's a lot of reviews out there, and people are liking it. There'll be, but at the same time, they said some of the more detailed features around the AI, Apple Intelligence will be, instead of coming out in September, they'll be coming out in October. So a few weeks, not a big deal. It's par for the course for the industry. Also, like OpenAI, Google, everybody has a whole bunch of things in the pipeline for AI. They're all running a few weeks behind. Example, OpenAI just announced their AI for search product called Search GPT. Rather than make it available to the whole world, they're running it as a prototype within closed walls with a wait list. Again, part of the reason here is compute. All of these companies are rushing madly to get as many GPUs and TPUs in Apple's case, TPUs, which are the chips from Google, which is one of their partners, to build the huge data centers to get them ready to roll out these features to mainstream users. You need a lot of compute for these new features that are coming up bottom up. And so that's part of the delay. And it also gives time. But the important thing for people who are in Apple stock is that developers are going to get a fair bit of time to kick around with this and have a bottom up AI, Apple Intelligence centric features across their system. And that's going to be unique for Apple. That's why one of the reasons I continue to view Apple as one of the most underappreciated big cap names in AI after NVIDIA and Google. But I actually ahead of Google, because I do think they are flipping the narrative and the business model around what you could call it, Apple Intelligence or AI.
Can I bring up one other chart here to look at quickly? I know it's stupid, but VRT, which is data centers, right? This goes to like the same thing happening to some semiconductor stocks. JC VRT, which is a data center play, but had a huge run to 100, is in a vicious, along with semiconductors, pullback. But again, in a world where hardware and real estate and energy matters, I think these are the type of companies people are going to have to start getting familiar with and pullbacks, right? It's, again, just 5,000 followers, 30 billion, and it is the leader in data centers. Again, this goes to trends with no friends, right? You have $30 billion company with 5,000 followers and really tied to AI and semiconductors. And it's Columbus, Ohio, of all places. And it was only founded in February 2020. So again, I can't talk to the valuation, but this isn't fake, right? This isn't like a company that's like making stuff that no one wants. So again, this is a chance to do some work on some this was an incredible breakout at 24 to 100. So I've got to do some work here, but it ain't going from hero to zero overnight in this space. Data centers.
Can I just say how happy it makes me? Howard Lindzon bringing out an industrial stock. Look at you, bro. $27 billion electrical equipment parts. It makes me so happy.
Do you consider that? So again, there's the infrastructure bill from that Trump is supposed to give us, that the Democrats gave us. I know you got to run, but like, let's be honest, like Columbus, Ohio, industrial stock. I mean, is it true industrial? Is it really just a tech company? I don't know, but like it's a Columbus, Ohio based technology integrator, supplier. I don't know what you call this, but I'm not going to call it industrial because it probably doesn't employ. It's not like making cars. It's just hooking up wires.
He brings out the industrial and purposely says, "I'm not going to call it an industrial." You see how he hedges it? You see that? You see that he can't get himself to do it.
It's AI infrastructure. It's cloud data center AI infrastructure.
Look. Here's mine. Here's a new IPO, health services information. These types of stocks are coming up left and right. It's a new issue, $7 billion name. I love it when a new issue comes out, it sells off, it gets back to the new issue price, and then breaks out above that. I love that. This one is a candidate that can do exactly that.
Artificial intelligence and machine learning in healthcare, Chicago, Illinois.
Tempest AI.
Eric Lefkowski. So he's the Groupon guy. So expect a lot of hype in here. But okay.
See that? I can find a name or two. See?
No, but I'm just saying, sure enough, when you look at the buzzwords in the profile of that company, it's like, and then you see Eric Lefkowski and you go, okay, that's the guy who brought you Groupon and every other like fast talking. And it's like Chamath of Chicago. But anyways, yeah, a good chart is.
It's the season.
It's the season, baby.
I'm just trying to sell things at higher prices than where I buy them. That's it.
There's never been a better time. You go to Koyfin, go to FinChat, go to Stocktoberfest. You can do your work. You can come up with your own signals. Obviously, price is very important. But you start with price and you start with indexes and you can tour the world. Anyways, I think we covered a lot of ground. Fuck healthcare. Let's call it a day, Phil.
Beautiful.